As we all know, the housing market is just one critical part of the economy that Federal Reserve policymakers watch. Another is inflation. And as more and more signs point to higher prices, a question that central bankers are asking themselves is how much inflation is too much? Steve Liesman takes a look for us tonight.
How hot is too hot when it comes to inflation for the Federal Reserve, and what does that say about the outlook for interest rates? The Fed has made a huge deal of saying its 2% inflation target is symmetric. That is, since it was below 2% for quite a while, it will tolerate inflation above 2% for some unknown while. What's unclear is how much tolerance the Fed has and for how long. Here are the numbers. Since April 2012, the Fed's preferred inflation indicator has averaged just 1.28%. Take out food and energy, and it's averaged 1.58%. Now, remember those numbers. Let's look at what Fed officials have actually said about tolerating high inflation. New Fed Chairman Jerome Powell in March said, quote, "At times it may be above 2%, just as at times it may be below. Our inflation objective is symmetric," he said. Dove Charlie Evans, the Chicago Fed president, said, quote, 2.5% in an environment where expectations are that it would come down longer term and that it would be contained. I don't think that's a problem for our symmetric definition. Put it all together, and it seems there's some, but not a huge amount of tolerance for some overshoot on inflation. What would it really take if the Fed meant what it said? We ran the numbers. To undo the 6 years where the Federal Reserve was below 2% inflation, for the next 6 years, it would have to average 2.7% on headline and 2.4% on core inflation. So the bottom line is probably this: a little overshoot won't change the outlook of 2 or 3 rate hikes this year. But the Fed is unlikely to be truly symmetric. It will probably accelerate those rate hikes if the inflation overshoot is anything more than just a few tenths. That is, not very hot is probably plenty hot when it comes to inflation for the Federal Reserve. For Nightly Business Report, I'm Steve Liesman.